Hi, this is David Cole, and I'd like to say thank you for stopping by my YouTube channel. In this video, we're going to review 11 easy steps that can help you raise your credit scores fast. Before we get started, could you do me a favor and hit the subscribe button? I'd appreciate it very much. Now, the things I'm going to share with you in this video, you can implement yourself without any assistance, although most people feel more comfortable having a legal expert guide them through the process of verifying their credit records and disputing or modifying any inaccurate entries that you might have. Now, bad credit scores hurt, don't they? I mean, they keep you from buying the stuff that you want to do. Sadly, most people don't do much of anything about their credit records and scores until they're denied financing for something important that they want to buy. Then all of a sudden, it's a five-alarm fire and they're desperate to restore their good credit standing as fast as possible. So let me ask you this question. Do you know what your three credit scores are right now? Not 3 months ago, not 9 months ago, what they are today. It's very important that you do because you see, lenders approve or deny your application largely based on your credit history and scores. They're not really interested in your personal situation. They look at that information and decide if they're going to extend you credit. Now, a large part of that is where your credit scores fall on a rating table. So these credit scores are issued based on your credit record, the history of your good or poor payments. They're issued by Experian, Equifax, and TransUnion. So lenders do have the right to decide what they think constitutes a good credit score. But if you were to look at overall averages, this is where most lenders would fall in place. So obviously, your goal is to have a credit score, all three credit scores, at 720 or higher. That means that not only will you be able to obtain the credit that you need when you want to finance something, but you're also going to get the loan at the lowest interest rate possible, which of course is very important. So obviously, what's contained in your credit records affects your life on every level. So step one of these 11 easy steps is download your free credit reports. The Fair Credit Consumer Act allows you to have a copy of your reports every year from each of the three bureaus. So that's the first step, is you're going to download them. And then, of course, people say, well, what are you looking for? Well, you're looking for anything and everything that is not absolutely accurate. This is you and your history on paper. So everything needs to be correct. Now, don't assume again that your credit reports are accurate. CBS 60 Minutes reported that nearly 40 million Americans have errors in their credit reports. Nearly 20 million have really serious errors. So here's sort of what we call a primer checklist to get you started. You'd want to be checking the spelling of your full legal name, your social security number, your date of birth, your current and past addresses, your employment history, your marital status, and a few more would be each and every credit lender you've ever had. Credit inquiries you don't recognize that you didn't authorize. Accounts that show up from your ex-spouse, for example. If they weren't paying on that account, that would obviously affect your credit, right? Charged off accounts, collection company entries, everything and everything. I recommend printing the reports out, taking a yellow highlighter and highlighting everything. And don't be surprised to find out that there's a lot of difference between the credit agency reports because they don't talk to each other. They don't compare. They only report the data that they get on you. So you might find a whole bunch of errors on one credit report and virtually none on another one. And that's, again, why you need to go and look at these. So let's go on with step two. You need to verify that every creditor reports your maximum credit limit accurately. That's extremely important. In fact, I call it super important because it affects your credit utilization rate. Credit utilization is simply how much credit do you have on an account, how much do you owe, divide them together, and come up with a percentage rate. So just to make sure we're on the same page, if you had a $4,000 credit limit and you're owing $2,000, then your credit utilization rate is 50%. Now, your goal rate per card should be rather 30% or less. That's what will have a positive impact on raising your scores. Now let's go on to step 3. Step 3 is a really easy way to start adjusting your credit utilization rate, and you do that by requesting a credit card limit increase, not a new card, going back to your existing creditors and asking them to raise the limit. If they do this, your credit utilization rate will drop as long as you don't give in to temptation and use that new credit limit up. You don't want to do that, right? Your goal is to increase your credit scores so that you are able to get financing down the road. So that it would have an immediate effect and a positive effect on raising your credit scores. Let's move on to step number 4, because this is something that most people never think about. And that is, it's the reporting date that's important, not the due date. We all focus on the due date because we know we have to have our payment in on or before the due date because we don't want late payments showing up on our account. That obviously would hurt your credit scores, right? But it's actually the reporting date that's critical. So what you want to do is determine when each credit card issuer reports to the credit agencies, and then you want to make your payment at least 3 full days before the reporting date. That means that when they report to the credit agencies, they're reporting the lowest balance possible. And that has, again, a huge impact on your score. Step number 5, I realize that, again, trying to make full payments or add a little bit more even to get the account reduced can be a little hard from a cash flow standpoint. So don't be afraid to break it up into 2 payments. Make one payment 3 days before the reporting date. Make the next part of the payment, the final part, 3 days before the due date. You'll still have a good report. You'll still be reducing the balance and saving some interest at the same time. Now, in step 6, I call this life happens. There's always things outside of your control that happen. And what if you find yourself having some late payments, or heaven forbid, one of your accounts is seriously delinquent, it's facing a charge-off? I want you not to be afraid to talk to your lender. They have departments. They are there to assist you to get back on track. So they can eliminate late fees on your account for you, which is really cool. They can reduce your interest rate. In fact, I've had some people that I've talked to that have had their interest rate reduced clear to 0% for like a year. I mean, how awesome is that? So work with them, and they'll give you some breathing room to catch up. But here's something important. Don't choose a repayment program that closes the account. You do not want to waste or lose the history of that account, because that counts, what they call, towards well-aged credit accounts, and I think it impacts your score about 15%, if I recall right. Now, what if you're trying to get a mortgage, or you're really under a time crunch and you really need another way to give a boost to your credit? Here's something that does work, and this is something that you would do with either a very close friend or a family member, and that's actually have them put you on their account as an authorized user. So your name is now on their account. It's a way of borrowing their good credit, basically, to help you out. However, this is not for your use. So I highly suggest that when the new card comes with your name on it, the family member or friend shreds the card. They do not give you their account number. They do not give you online access. Don't allow this strategy to impact your relationship with your family member or friend. That would be sad. All right, step number 8. A lot of people do this, and it works very well, and that's obtain a secured credit card. It's basically a savings account with a credit card attached. So the amount you have on deposit in the savings account determines the credit limit of the card. You put in $1,000, obviously your card has a $1,000 limit. If you need to use the card, I highly recommend that you pay this account off in full before the reporting date every single month. And then this can be very beneficial to you. Step 9 is something, again, that a lot of people never ever think about, and I think that you might find helpful and well worth the effort. And that is what we call boosting your scores with overlooked accounts. Make a list of all the bills you pay, your rent, your cell phone, your cable TV, utilities, medical bills, insurance premiums, whatever, even the gym contract you have. Contact them and ask them if they would be willing to report your good payment history to the 3 credit agencies. Not all of them will, but let's say 2 or 3 do agree. Well, that good credit report coming in now is definitely, again, going to boost your scores and help you out. Step 10 is the fact that you can move it around and balance it out. We're going to go back to the credit utilization at 30% per card. It's really so important that you reach that goal, or even less than 30%. And so if you have a card that maybe you have a very low utilization rate of 10%, and another card that has a much higher, maybe it's 60%, move some of that 60% card over on a balance transfer to the lower utilization rate card. Don't try and keep them both definitely 30% or less, but they're going to look at those individual cards and see where that utilization rate is. Very simple and quick, easy way to balance that rate out. A lot of people do that, have good success with that. Now we're finally to step number 11. And step number 11 is, we say, make yourself more attractive by diversifying your credit mix. If you look at your credit reports and basically you have maybe an auto loan and all the rest are credit cards, let's say you have 5 credit cards, you're still not becoming attractive to the algorithm of credit scores at these agencies. They want to see other lenders that are willing to take a chance on you and extend your credit, and that shows that you're a well-rounded out credit user, as it was. So here's a really cool strategy and ending that's worked really well for a lot of people, and that is our mix-it-up strategy. You obtain a $1,000, just as an example, a $1,000 loan from your bank or credit union, maybe a 12 to 18-month repayment term. You use that $1,000 to pay down a credit card, or maybe spread it among several credit cards, again, to get down to or under 30% utilization rate, right? And then your payments that you make on this loan, they go into a savings account, which is then released to you when the loan is paid off. How cool is that? All the money you get back, but you're able to use this as a tool to say, hey, I've got a personal loan. That's a different kind of credit. I'm working and massaging my credit utilization rate to get it down to where I'm attractive. You're doing everything in your power to give the credit reporting agencies what they need to begin to raise those scores. So I hope you learned a lot. I've tried to cover this as quickly as possible. And I want to thank you very much for watching our video. If there's anything I can do for you, I'd love to have you visit our website. We got a very an amazing eye-opening video also on our website that you can watch. And again, one final favor for me, click that subscribe button. Thanks much.